right, thank you. My name is Jörgen Larsson. I'm the CEO of Stillfront Group. So we have it's a very good timing for us because we just released the year-end report today. And we also report not only one year-end report, we also will present the acquisitions that we concluded in January, even though it's not a part of our formal numbers for Q4, we will still present Good Game as being a part of Stillfront Group. So you will see a lot of information, a lot of numbers and slides. So please also feel free with all the questions you might have. And thank you, Pareto, for arranging this. We appreciate to have the opportunity to be here as well. We took a giant leap and have taken a giant leap in creating a market leader. Market leader in free-to-play, mobile and browser strategy games. We have a global presence, both in terms of number of users that we have, 5.1 million throughout the world, and we also have 380 employees now as we talk throughout 9 different studios in 3 different continents. So we are a true global player. We are very focused on the genre where we are market leaders, and we have a quite impressive track record, I think, because we have in total, our new group that we have created have more than 1 billion euros in lifetime booking, and more than 400 million people have played the games that we have in our portfolio. So that is quite large numbers. So today we will present, as I mentioned, our year-end report for Stillfront, and note that for Q4, formally, Good Games is not a part, so we will present Stillfront's year-end Q4 and year-end report, as well as we have made one for Good Game, and then we have pro forma to be presented during the financials as well. So this is the best year so far. Also, when it comes to the numbers for Stillfront Group, we had revenues of 166 million SEK for the full year, with 32% EBITDA margin, and in the fourth quarter we had 53 million in revenues, which is all-time high for us, with 29% EBITDA margin. That's a 116% growth from Q4 last year. And now up until December, we delivered 37 consecutive months with all-time high in rolling 12 months revenues. That's stability, and that's a very solid performance, I think, and that you can see on the lower side, left side. You can see that our growth is very solid since we went public in Q4 15, and even accelerating when it comes to growth. And this is, of course, excluding Good Game. Also, you can see that the margins that we have are also accelerating, so we are quite happy with the development. Further, with the fourth quarter, we are extremely happy with the new launches we had. When we presented Q3 and when the third quarter was ended, 2 new products that was launched in Q4 were obviously not contributing at all. And that was War and Peace and a game called Nibelheim 3. They were extremely successful launches in Q4. So in December, War and Peace actually were our most highest grossing game. And in February, just recently, currently, both those 2 products, they are our largest grossing products, excluding Good Game. So just imagine the impact that has. 2 products that didn't exist the last of September is now in the first 2 weeks of February, our largest grossing products. So we're obviously very happy with that. I will come back to that. But obviously the key highlight for Q4 was the acquisition of Good Game Studios. Good Game Studios is a superstar in the European gaming scene. I've looked into more than 1,100 companies the last 4 years, and Good Games is one of the absolute best companies in terms of quality, what they have achieved, what skills they have, what portfolio they have. They bring 2 massive brands into our portfolio, which we will go further into, and they have a tremendous traction as well in a number of other aspects. So we are extremely happy with that, that we have managed to do that deal. Besides what Good Games consist of and what they have, we are also very happy with the deal from other perspective. This is a nearly perfect strategic fit. They focus on the same kind of free-to-play strategy games that we do. so that fits very well in terms of audience, knowledge about the sector. They have also the type of products, the long life cycle products that we think is very good to work with, the same business model, the same vision, and they share the strategy of how to develop companies. So we'll go into that during the presentation, but that is super important, and that's very hard to see just from a press release or when we announce a deal, but that's something that we have seen throughout the 6 months that we had discussions with Good Game, and that's super important. Further, also very important is the timing. From my perspective and from Stillfront shareholders' perspective, I must say the timing is just excellent in doing this deal, because Good Game they turn around to a focused growth, so they're focused on their core products, which has been exceptional successful, and they have growth since May 2017 again, and always with a high profitability. And there are also new products on its way out, one released in Q4 and others to come during the first half of this year. So it's an excellent timing for us to merge with Good Game. Just to also highlight the value of we like to create the value already by the transaction. I think we did so in this case as well. Just look at the numbers here. If you take the full year revenues compared to per share, if we did the number of shares that we had prior to the transaction, the increase in revenues per share compared with the pro forma and the new number of shares we have in conjunction with the deal or after the deal, we increased the revenue per share by 80% just by where we stand today, the full year. We increased the EBIT per share by 155%. That is, in my perspective, shareholder value in the transaction. Obviously, value is built over time, but just to give you another view of how you also can see this from a financial perspective. All right. Moving over to presenting the highlights from Good Game. Again, not in our books until Q1. They had full year revenues of 917 million SEK. And with a full year margin EBITDA of 34% and EBIT margin of 25%. So it's a very high cash conversion in Good Game, which is very good, obviously. In Q4, it was revenues of 231 million SEK with an EBITDA of 16%. What is one of the most important things and what we're most happy with, I think, is that it's a quarter-over-quarter growth in Good Game by 11% in terms of deposits. So that's a very encouraging and very important number. So we have a kickstart in our joint, from the joint perspective. One might ask, why is the EBITDA margin lower in Q4 compared to the full year and the first 3 quarters, obviously? Well, it is lower for a very good reason. And that is the launch of Big Farm Mobile Harvest, which is a standalone, fully mobile product under the brand of Big Farm. You can launch a product in 2 different ways. I will come back to that later. Either what we call a trampoline launch, when you put in a massive amount to build up a volume in a short time, and then you refine it and improve the numbers. In this case, it was a trampoline launch for different reasons we can come back to. So that means that you spend a lot of UAC and you get up the volume. The revenues in only since launch for Big Farm Mobile Harvest was 13.5 million SEK. Just reflect on this. That was from late October. Big Farm Mobile Harvest, this single product just recently launched, is larger in terms of revenues per December and November than the largest, most successful 70% growing eRepublik studio in Stillfront Classic. Just a single product. So it's a new eRepublik and even larger just in 2 months. So that is really some significant value for us. Okay. So launching a product in that way, of that size, with that impact, a trampoline launch, obviously takes some user acquisition costs. It demands some user acquisition. So if you look at the lower left side, you can see that we spent in total more than 100 million SEK, or Good Game did, in Q4, whereof 65 million SEK was just for the trampoline launch for Big Farm Mobile Harvest. Look at this, because the average over the year is only 23% user acquisition cost, which is a good number, I think, a representative number, but it's not evenly distributed, which you can see on the graphs as well. If they would not have launched Mobile Harvest in Q4, we wouldn't have had the 13.5 million SEK in revenues, and we wouldn't have had the 65 million SEK in user acquisition costs. Then the margins, the EBITDA margin, which now is only 16%, would have been approximately 40%. So that tells us that the existing products prior to the launch of Mobile Harvest are going very well in Q4, which is natural since we have a significant growth and a very efficient organization. So if we take away that, but it's a good investment, so I'm all for it because it's a new e-Republic, so to speak, in size or even larger, the margin would have been 40%. Further, Stillfront shareholders does not carry the cost for Q4. But we do earn the benefits from that trampoline launch because the games that we have are played for years and years and years. So the revenues that comes from Big Farm Mobile Harvest in Q1, Q2, Q3, Q4, 18, and for many more years, they will be on the benefit and in the P&L for the Stillfront shareholders. So this is one of the key elements and the key successes, I would say, in the negotiations with Good Game, because they took the cost for the trampoline cost, the sellers, whereas we jointly take the benefits from that launch. All right. Also, we have just to emphasize that the expected UAC, so we guide on UAC for Q1 will be approximately 70 to 75 million SEK for Q1. So you can see it's a very clear spike in conjunction with the launch. All right, further, there are more things coming out besides the success of Mobile Harvest. We have 2 new products under the Empire brand, Empire Millennium Wars. And we are hopeful that that will be a success as well. We are in soft launch, which is quite extensive. We are improving KPIs, just as you do in a soft launch. We plan to launch this the other way, not the trampoline launch, but with a ladder launch, where you take it in small steps and not as significant one-off investment in user acquisition costs. So the user acquisition costs will be lower as we launch Millennium Wars. It's a different approach. And the global launch is planned for the first half of this year for both products. All right, so going in more to our business. So I wouldn't, just as we heard a lot about the market here, so I wouldn't repeat so much, but as we all know sitting here, it's a very exciting market in many aspects, or even thrilling. The way that it could scale with digital products, the way that its demand is built up from a human need, and the growth, just a mere 8% growth in the market, etc. It's a lot of exciting stuff. There is also some critical success factors, which I will talk about how we address. And some of them are, you have to manage title risks, fuel the stars, and kill your darlings. And that's easy to write, not so easy in reality. But that's a key element. Further, how you work with the portfolio of products that you have. You have to be very systematic, very data-driven. Otherwise, it's very easy that you take the wrong calls and make the wrong decisions. So data-driven, professional, looking at your portfolio. The consumers are moving super fast. You have to attract and retain those consumers. Obviously, you have to deal with technology shifts as well in a clever way. And it's super important in online gaming that you excel in marketing and distribution. Otherwise, you will run into problems of profitability. And you need to possess and keep really top knowledge and experience in order to do that. So the strategic main areas that we focus on is the business model. It's super important that you have a good business model, obviously. Product portfolio management, how you go to market with new products. It's really a key skill. How you manage the portfolio over its life cycle, each product. So I will talk a bit more about that. And that you have a growth model. In our perspective, as you can understand, merger and acquisitions, to be active in that area is a key thing to create significant shareholder value. It's a key skill. It's not something you can do beside. It's a key skill. That's why we focus so much efforts into that. So the way that we have worked with our strategy, we have stick to the same strategy that we had several years ago. So it's the same strategy, and we focus on executing on that strategy, really focused, and with all the efforts and everything we can do in order to get a higher predictability in our revenues. You can't deliver 37 consecutive months with all-time high in revenues if you don't have a work with your predictability. And that's exactly what we've done since we went public, or even prior to that. So we focus on really executing that in order to be fast in development of new products as well as conducting of your business. We think you should be extremely decentralized. That's why we have a very decentralized structure. We get faster, we can execute more swift, and we can act on changes. So this is the way that we view the market and how important it is when it's such a dynamic market to focus on a clear strategy and focus on executing on that clear strategy. So what are our strategies? Many of you here have heard these strategies because they are the same since way back 15. So we have our product strategy called Plex, which basically is that we focus on long life cycle products, and we would like products, a portfolio of them, and we work with engines so we get scalability. We work cross-platform. I will go deeper into this. We have a growth strategy called HIGS. That stands for that we would like to leverage the structure we have in our organization, leverage the scalability that is in this industry by systematic M&A. With the Good Game merger that we did, we have significantly strengthened the third pillar of our strategy, the pub strategy, publishing and brands. We get in two of the most really strong strategy brands that are around. I mean, Empire is one of the most successful strategy brands online ever, or on any platform. So we get in really strong brands, and we get in really strong publishing capabilities. Okay, about the business model. We think that free-to-play business model is by far the best business model because it opens opportunity to earn more per player over a lifetime than any other business model. On mobile, it's evident today, I would say, because the premium model is almost dead on mobile. So it's free to play, but it's also very strong on other platforms, and I think it will gain even more terrain in the future. However, the downside is that you have to master a number of things. You have to be extremely data-driven. You have to be very focused on a number of processes that you didn't think about when you started to build on your Commodore 64, the first game. You have to work with prediction models. And I happen to love mathematics, so I love prediction models. But I'm not the one that is performing that, obviously, in our company. But we have very good mathematical skilled people that work with prediction models. So the way this works from a user perspective, from a consumer perspective, is the following. You acquire users either organically, very good, very cheap, but you can't really rely on that you get free traffic that just happen to see your game. But it's a good thing to have. You can get featured. That's a good way of get organic traffic. It's for free, so that's good. Less quality often, but it's for free. Then you have partner traffic, which I will come back to, where you have partner sites that you have an agreement with and share revenues that brings traffic. And the third is that you acquire and buy traffic that comes in to see your games. And that, in order to do that in a profitable and good way, you have to be really good at performance marketing. We will come back to that. But that's how traffic and people comes into your game. When they've come in, quite fast, and that's typical for every game in our sector, it drops out. So the number of players that comes in, the majority drops out in just a few days or a week. So the thing is that you refine the traffic that you get to a core which is very profitable and will stay for a very, very long time. And as you do that, when you launch a product, you get up the numbers, but as you refine the user base, the 20 that becomes active for a longer time out of 100 or something like that, then you increase what we call the stickiness, the relation between monthly and daily actives. And that's a quality sign. And then from those actives, not everybody is paying. Some are paying, but the ones that pay, they pay for a very long time, and they become exceptionally loyal in this kind of games. So they pay and play for years. And if you master that in a good way, you can achieve what is shown on the left side, is that you have a negative cost for buying users, but over time, as you can see, the revenues comes in, and if you're good at retaining and getting the monetization out of these customers, the value of that is fantastic. And there is no other business model that can compete with the value per paying users compared to free-to-play. But you have to master the different processes. You have to master what you do with a game when it's live in the middle phases. You have to increase the content. You have to work with KPIs, conversion numbers, etc. You have to have good live ops team that see to that it's fun events going on, etc., etc. Then you can get it up to the dotted lines, and that means extremely much for profitability. So this is the model and its beauty from a consumer perspective. From a product perspective, coming back to one of the key strategy areas is to manage the products, the portfolio of the product. So let's view that from the business model's perspective. So you have different phases of your products. One is obviously developing new products. And you go into soft launch or test, alpha test, or you take in users just to see whether the product works and how it performs. And then you take a first decision, should we launch this globally or not? If it has the potential, everything data-driven, no artistic thinking or stuff like that. It's just driven by data. Then you decide, yes, we should launch this. Then you have a high marketing spend, just as we had in Big Farm Mobile Harvest, or if you have this ladder approach, it's a bit less per single quarter, but over time it's higher. And then the revenue grows faster. You have a massive increase in DAU and daily actives and monthly actives, and you have negative margins. But it's a really good investment, even though it's taken over the P&L directly, as we saw in Big Farm Mobile Harvest. Then you come up to a refinement phase. And that's a very important phase, because then you have collected data. You have users in consuming your game, playing your game all the time. Then you can see, analyzing that data, what potential does this product have over time? And that's a key step, because then you know on which growth curve you can expect and what you could deliver from that. So, and that's either it's just okay, and then you earn money because this is digital product. So it's a good business, good margin, but the volume is not very high. Or it's mid scenario where you can scale it up to a certain level with good margins and get it up to a product that will be on high levels for many years to come. Or it could be something that really goes very high up. So that is a critical point where we have Siege Titan Wars for the time being. And then you have the growth phase where you invest more in marketing, and you expand the content, etc. And then you have the earn phase, which is in the types of game we have, strategy games, it's many many years. Our oldest game is 30 years. It's older than the public internet. It's an online game. And it has its best year in 2017 since 2009. So games could live not only 1 or 2 years, they could live for decades. And then you have exceptional high margins, and all those users that I talked about earlier that has come in, that you have bought, that you have taken into the game, if they still think, because it's a lot of content and exciting stuff going on in the game, they play for years and they pay for years. And then you come into a legacy situation where you should just keep on rolling the product with profitability. So mastering these different phases, not to fall in love with a product that doesn't prove it with data and facts that it could be something much better, and scale up when you should scale up based upon data, then it's a fantastic business model again. The free-to-play business model is outperforming any other business model in our view. All right, so key is performance marketing capabilities. And we think that we think that Stillfront Classic, prior to the Good Game deal, has been really, really good. We have performing with high numbers, growth, and also profitability. But now we have Good Game Studios on board. Good Game has the best performance marketing capabilities I've seen at any company anywhere looking into 1,100 companies. They have spent more than 200 million with positive ROI, and that's an effort which is very hard to repeat. It becomes exponential more difficult when you scale up the volumes. How does this work with performance marketing? Well, the dynamics of performance marketing is that first you spend, and then as the consumers come in, as I showed in the previous slides, some of them start to spend. And if you have the right content and the right way of supporting them and converting them to a good degree enough, they will spend a lot. So after 6 months or so, if you're successful, it's pure profits. That's the beauty of this model. And you can see on the upper right side is actuals, just to show the time perspective of this from Good Games. They spent 8.4 million euros in Q1 13 in user acquisitions. The users came in, just like I showed in the previous slide, and they start to spend. After 6 months, the money was back, and then it's just pure profits, not only for the next coming quarter or two, for years. And they're still contributing, those users, to a significant amount every single day, every single week, every single quarter. So that cohort from Q1 2013 has paid off 4.5x, still counting. Was that only a luck that quarter? No, it was not, which you can see on the lower left side, where we have a lot of quarters that are displayed. So Good Games marketing capabilities are unique. They have delivered and recouped the spend, the marketing spend, in less than 6 months for all these periods. And that is exceptional difficult when you spend at the scale that Good Games has done, 200 million euros. So this is super important skills, absolute critical skills to scale up games. And you can see on the lower side how it typically look. If you don't have the capabilities, top-notch capabilities, and the best people in performance marketing, you can have a good game, a really good game, but you can't systematically scale up games the way that we can do. And that is what's illustrated in the lower left corner. Good Game also has a world-class distribution network for browser games. They have, over the years, established corporations with 16,000 different websites, a business-to-business deal. So they can take a new browser game, pour it into that distribution network, and it's like an affiliate system, and on a rev share basis, increase the revenues. No upfront cost, like in performance marketing, just a rev share on actual revenues coming in. This is obviously an interesting area for synergies as well, since we have browser games. And you can see 147 million registered users has come through this network as we speak, and still counting. And that leads us to the tangible and the very good fit that I talk about between Good Game and Stillfront. So we have a number of very tangible things that we are already working on. And that is within marketing and distribution. We can take our games, put it into the Good Game machinery, and it will be very surprising if that wouldn't ramp up the revenues. We also in Stillfront have developed what we call a platform extension capability. I will come back to that we can share with them. So there is a lot of areas where we can work together and create synergies. I will come back to that. So going into our portfolio. Throughout the years, the Stillfront way of building a portfolio has been the one on that side. We have taken small games, taken them with a very efficient go-to-market model, low initial investment, let the users tell us what the value of this product is, and then take incremental investments to scale it up. We have done that, I think, with a good success rate, and that is what have produced a very predictable and stable and high and even accelerating growth with good margins. So we are very happy with our go-to-market model. It's efficient, it's risk-reward optimizing. One thing we haven't had so far, which is another way of go to the market in an efficient way, and that is using a very well-established and strong brand. Probably the oldest trick in the school of the entertainment industry in general, with Star Wars movies coming out, not necessarily the best movies you have seen, but it's a high-selling movie since they're reusing, in that case, the Star Wars brands. Now we have two massive brands. Empire, again, is one of the most selling, most played strategy games of all time on all platforms. So now we have large brands, and what you can do then is that you can reuse the brand to make new products. And the likeliness that that would sell is higher because the cost for acquiring users into that type of games when the brand is well known is much lower. And we have measured that, so it's not what we hope or think. We can measure 2-digit percentage better conversion with taking a product with the Empire brand compared to doing the marketing the same product without the brand. So we know from data that that is the case. And that's also providing us with another method of go to the market in a very efficient way. The layer over layer, low investment method of Stillfront Classic, and the one where you're using the asset of your brand to make larger products coming into the market. That's a very good thing. Platform extension versus brand expansion. That is, we've received a lot of questions because, oh, so you only have Empire's only one product. No, it's two different products. But what is platform extension? When you take one product to go to other platforms, is that the same? No, it's not. So I try to illustrate with this slide. Platform extension is something very good. We do that in Stillfront today in Call of War primarily. You take one product that is on one platform and you make it available, for instance, a browser game on mobile and on Steam and on different platforms. There are several mobile platforms as well. By doing that, you can increase, is our view, between 20 and 50% is the potential revenue lift from doing that. And it's very good because you leverage an existing asset. However, brand expansion, again, is when you're making a completely new product, a mobile product, for instance, when you have a browser product, but it's a tailored product for the mobile users. And the difference is, the good thing with that is, it could be designed completely to match the user behavior on the mobile, which is slightly different from the browser. So that's why there is a 1x up. It's 100% potential when you make an adapted product for the user, for the mobile user. So that's a very efficient thing, we think. So that's why Good Game Empire and Empire 4 Kingdoms are two on-par products, very huge, and not only a mobile extension to the browser product. So this is our current joint portfolio. We have the Empire brand, which represent the two products that represent 60% of our revenues. The growth were, in terms of bookings, were 7% up, so it amounted to 175 million in Q4. I will come back to some more data about the users in a second. The Big Farm brand, also containing two products, with a 24% growth since we have the launch of Big Farm Mobile Harvest. We are planning to have more products under the Big Farm brand going forward, and that's important. And in the Empire brand, as I mentioned, we already have two new products on its way out. Empire today represents 90% of the Q4 joint numbers. Then we have core products, the layer over layer products that we've had in Stillfront for many years. And they are in total 18, and they represent as a group jointly for seeing Good Games and Stillfront Classic as one group, 20% of the revenues. And you can see the growth of core products is 22% with good margins. The largest products in Stillfront in Q4 were Call of War, that grew by 25% up to, thanks to the platform extension, up to 9 million SEK. War and Peace, 7.6, and World at War, 6 million. Some user numbers. So here you can see the development of active users per segment. So we had a total quarterly growth from Q3 to Q4 of 17% in daily actives, which is a very good number. Obviously, very much driven by the fact that we acquired users into Big Farm Mobile Harvest, just according to the pattern and the mechanisms that I described when I described the business model. We can see it's very stable when it comes to both core products as well as Empire. When it comes to monthly actives, you also see the growth in for the Big Farm brand, and you also see a very nice growth for the Empire by 14% over the quarter. So we're happy with that. We have a decline in core products, which is a consequence of the massive launch and intake we have from Siege in Q3, and Siege is going into that refinement phase I mentioned, and then hence the monthly actives go down, and the actives go down, and the stickiness goes up. Looking at paying users, we are happy to see a quarter-over-quarter growth in total for all three segments, but Good Games and Stillfront jointly here again. 15% up, 63% up for Big Farm brand, and 4% up for the Empire brand, and more or less flat on core games. And you can see on the lower side the average revenue per monthly paying user. You can see that we have a nice and solid growth in the Empire brand, so we're up at 754 SEK per month of the paying users. Again, just realize these payers are playing and paying for years. Again, the business model is fantastic if you have that kind of revenue for one single month. You can see core products is going down in Q3 since we launched Siege, and you have more players that are not yet refined and consolidated in, so you get a spike in number of payers, but they're not loyal, they're not so deep into the game, so that's the usual pattern again that I spoke about, but it's picking up again in just as expected in Q4. And you can see also it's going down again since we launched a new product, so the average will go down because the ones that started to pay in December, obviously splitting that into 3 months, taking an average will be a lower number. So that's explaining why Big Farm is going down. So launching products in the short term will lower the average revenue per paying user, but you can see it's very solid on Empire, which is important for us. So then I have a deep dive into some products. I think we will have some extra minutes since it was a technical error, right? Yeah. It's a premium product you could buy 5 extra minutes or no? Yeah. Okay. The free-to-play, free-to-talk model, premium. Very good. Siege, we're both happy with some things, but we're not completely happy. So we're happy with the improvement we have made in lifetime value and the engagement from the players and what the paying players are paying. It's really good, and we have been able to increase that more than I expected. We're not happy with the performance marketing, to be very direct. We work with partners in this case, and we are renegotiating the conditions with Tilting Point and SkyMobi. We have good capabilities of marketing product ourselves, we think, but that is the case. So we haven't been able to scale up the product the way that we have hoped for. But it's still too early to say on which of the growth path, if you recall from that slide, we will be with Siege. We are exactly in the point where that will be proven in the next coming months. Call of War is picking up nicely. The platform extension is paying off with approximately 20-25% growth of Call of War due to that we have this platform extension. So the usage on mobile is up to 30-35% of installs and the monthly. Many plays both on browser and mobile, so it's a complement. Some play only on mobile. The revenues are lower than the usage, but it's increasing. So approximately 13% of the transaction, but 7% of the revenues is coming through the mobile. That's a good blend, we think, but we're improving it for every month that goes. Coming to Steam, it's actually better than mobile so far. So it's up to almost 10% of our revenues for Call of War comes through Steam, and we're improving with more features. So this is really strategically important for us. Taking, again, a browser product, make a platform extension, we see that we can really increase revenues by, we increase many KPIs and revenues as well. All right, War and Peace. Our most successful launch in December, it was our highest grossing game. It came out in October. So in total, 7.6 million SEK in the quarter, and we are really happy with this launch. The monetization is exceptional good, and that means we have a potential of scaling up the marketing. We haven't had so much marketing yet for War and Peace, so there is a significant potential with that product going forward, scaling it up. I'm taking this a bit fast now to try to keep the time. Nibelheim 3, I'm super happy with seeing that we're back on track and even better than that with Babil. They had 2 not so successful launches in Q1 and Q2 17, but now with Nibelheim launched in late last year has been exceptional good. So it's only accounted 1 million SEK in revenues in Q4, but the first 2 weeks of February, this is our highest grossing product, excluding Good Game, in a very short period. And here we conduct performance marketing with very, very good return numbers. So it's very short forecasted ROI on marketing spend. So it's early, but it's looking really good, and it's the largest product we have currently. Again, in this case, just as in War and Peace, the initial investment for taking this product to the market is only 1 million SEK, recouped in days. And then we can increase the investment, and we reuse a lot of the engines that we have and the assets we have. The capital efficiency is hard to beat when the initial investment is 1 million SEK. And the revenues were 7.6 already in that launch quarter. So, financials.
Thank you, Jörgen. Is my mic on? Yes, my mic is on. Thank you, Jörgen. Very well presented. All right, I'm going to talk a little bit about the financials. First, we look at the year in full, a very good development with Stillfront Classic having developed 116% increase in revenues, quarter over quarter, 17%, As Jörgen mentioned, we had this massive launch of Siege in Q3, so it's a tough number to beat, but still we managed to beat it by 17%. And the net revenues were 53 million SEK in Q4. So that's, by the way, almost as much as our yearly revenues in 2015. So we're actually growing quite fast. And that is also showed by the compounded annual growth rate, which is 58%. Margins, the EBITDA of 2017 was 52 million SEK. That's 53% up compared to 2016. Q4, 15.4 million. That's more than 100% up from Q4 16. So we still have a very good traction there, I believe. The balance sheet, what's worth to mention here is that we have intangible assets that are based on capitalized product development, the R&D, which goes into producing the new products that we deliver to our customers. That's 77 million SEK. We have acquired products, a number of products that have been already developed when we acquired new subsidiaries, so 36 million SEK. And obviously there's always a goodwill item when you have a growth strategy based on acquisitions. Our non-current liabilities, it's the earn-out item of 61 million SEK. When we acquire companies, we always try to include an earn-out component, and a certain value of this earn-out component is recorded on the books according to the IFRS regulations. We have the bond issue of 103 million SEK, and that was December 31st. Obviously, in January, we issued another 390 million. So you'll see in the pro forma balance sheet that I'll show in a second, we have the full 500 million in non-current liabilities. So this is the pro forma as if Stillfront Group and Good Games were consolidated during 2017. Net revenues of 1,083 million SEK, that's 1 billion SEK. An adjusted EBITDA, and the EBITDA is adjusted for restructuring costs within Good Game, transaction costs, and a one-off item within Stillfront of 83 million based on revaluation of the earnouts that I mentioned on the previous slide. So the adjusted EBITDA, 367 million SEK, corresponding to a 34% EBITDA margin. Jörgen mentioned the heavy investments in marketing in Big Farm Mobile in Q4 Good Game. If we were to exclude that marketing cost and exclude the Big Farm revenues, we would have close to 40% EBITDA margin 2017. The adjusted EBIT is a 22% margin, 240 million SEK. So we believe this is pretty good, and it's all indicating and confirming that we are not changing the communicated guidance for Good Game. It's still 120 to 130 million euros for 2018, with an EBIT of 25 to 30 million. On the balance sheet, what's worth to mention is that even though the acquisition was made by Stillfront Group acquiring Good Games by issuing shares and the bond, etc., from an accounting perspective, applying IFRS 3 combination of businesses, this is a reverse acquisition, meaning that the purchase price analysis and the goodwill item will be calculated as if Good Game is the acquirer of Stillfront. This is all accounting, But what it means in practicality is that when we issue the Q1 report, the comparable numbers for Q1 17 will be the good game numbers and not the Stillfront numbers. But that's all accounting, nothing to do with reality. So I think also what's worth mentioning is that our leverage ratio, pro forma, is 1.3, and our interest coverage ratio is 7.6. Both of them well within the boundaries of the covenants in our bond. So, Outlook is a product from Microsoft.
Exactly. So, we have communicated new financial targets when we made this deal for the combined entity, and this is mid to long term. We should grow organically at least or higher than the market, which is in our case approximately 10 to 12%, depending on which one you listen to, but approximately that pace. So that we should do, and in addition to organic growth, again, very important or even key is that we continue with acquisitions. So non-organic growth will come on top of that. We target to have a margin, an EBIT margin exceeding 30%. And further, we see that as we come down that, with the high cash conversion we have, as we come a bit further in the timeline, we will be a company that pays dividend, up to 50% of the net profits, because we are so cash generative. As long as we have the current bond, however, it's not allowed to make dividends, but so either we have to refinance that or we have to wait to the term of those bonds is out, which is 2020. Leverage, this is indicating that we continue to work with leverage. We think that's a very good thing for the shareholders. It's leveraging the value of the shares. We will continue to do so, but having said that, we plan not to exceed 1.5 in leverage ratio. Also, at the bottom is stated a very important thing. We have initiated now the work with moving to the main market within 12 months from closing the deal. So that is what we're working with in parallel with doing great games and expanding those. So this is the last slide. So this is the outlook. The priorities for the new Stillfront Group is that we continue to focus on growth. That's our number one priority. Number two is the EBIT margin. Number three is synergies and leverage. Number four is predictability, which is a key thing for us, and stability. The reason why it's number four is that we think we're not done, but we have come a significant way when scaling up the company to the size we have today. I wouldn't go into all details in the expansion of the portfolio for time reasons, but we have a number of products on its way out, a number in development, and I'm sure that we will see more new products on the market than we had last year. Synergies, we already have kickstarted a number of very tangible projects where we cooperate between Good Games and Stillfront, the other Stillfront studios. And very important, we will continue. We're not done with acquisitions and the non-organic growth. So we are discussing, still having dialogue with new companies, and we will definitely continue with that. That's important. So our vision is to be the leading group of independent game developers on a global scale, delivering high shareholder value by high growth with good margins. And I think we are taking a giant leap this year. This year and 17. But we have just begun. This is just the beginning of this. We're not done. Thank you.
Thank you, Jörgen.
I try this. I have a lot of questions and we have very little time. So I think we can basically start almost where you ended. And in terms of new acquisitions, I mean, you are quite a larger company now compared to just 3 months ago. Will you consider to move up a level concerning acquisitions going forward, or will you still be able to do these bolt-on small acquisitions?
I think it's very natural that the acquisitions that we do going forward is on a larger scale. That's natural, but we go for quality, not quantity only. But everything the same, you can expect the targets to be larger.
And is it some targets within these 1,100 companies you have been scanning so far, or do you need to scan another 1,100 companies?
As I mentioned, we are in dialogue with, we like to follow companies for a while, so we still are in dialogue with a handful of companies. Whether that will be something at the end and when, we never give any forecast, but we still have them. We have them on the list and we are in dialogue.
Okay. And I just read in the report that you're keeping the good games guidance. So what are you most excited about in 2019 with the consolidation of good games and now running that business?
I think we have a very clear strategy that we share with the new good game guys and ourselves, the Stillfront Classic. And we are very focused on the most exciting types of games, and we excel, I think, in performing on that. So free-to-play, strategy games, and strategy games are very good because they keep the users for many, many years, and that provides a predictability and stability. And I'm super excited to continue that journey, and I think that we have a unique market-leading position.
Thank you. Do we have a question from the audience?
We are a small company, yes. So that's why I state clearly that this is not an end point in any way. We have plans for continuing this journey. We don't give forecast on non-organic growth, or forecast either, but we have a guidance for this year, but otherwise we don't have forecast. I think we have proven that we're good at organic growth with balanced risk, so it's not depending on one or two titles. We have the mechanisms of taking small investments, just the method of adding products of small to mid-sized products. We will continue with that. Very high growth, 116% growth in that part of the business. And also we have 11% growth quarter over quarter on the big brand side. So I think we have proven that we can grow organically with high numbers, and we plan to continue with that. But again, on top of that, we see that it's very likely that we do more acquisitions. We don't know when, because then we compromise with quality if we set a deadline, but our plans is definitely not to be as small company as we are today. That's correct.
Okay, another question, a final question here.
Yeah, we have 6 products which is in the launch phase. And again, we can't say early in the launch phase which trajectory we'll be aiming at because it's data-driven from the actual usage. But we have a very high, relatively high success rate, and we're good at scaling up what could be scaled up. So we have existing products on its way out. Further, we have a number of products under development. We expect that the products from the core products from Stillfront Classic, so to speak, will be more new products in 2018 than we had in 2017. In 2017 we have 7 new products, so at least 8 then from that part, and then we have the good games related games. So I think that we in all will have some approximately 10 games on its way out for this year.
Okay. I think time is running up for your extra services as well. So
okay.
Thank you, Jörgen and Sten. And
thank you.